All right, bringing you out of the State Capture Commission of Inquiry for a little bit to bring you this breaking news story now. The latest GDP data has just been released, and as expected, the third quarter of this year saw a rebound after a major contraction in the second quarter. eNCA business anchor Rofhiwa Madzena joins me now to discuss some of the major contributors to the period and its numbers. Now, obviously, this is attributed to probably those restrictions, those lockdown restrictions being eased on business. Should we celebrate?
Not really, Masakho, and I'll explain to you why. What you've just said now is that we're only seeing the opening up of the economy, and that's why we're seeing that huge spike of 66.1%. If we take a look at what we saw in the second quarter, you would have remembered that GDP contracted quite significantly, and that's why we saw that, I think it was around 51% contraction, and it was because essentially the economy was shut down. So what we're seeing in terms of these big numbers, which we're not going to see again, the fourth quarter, we might go back to single-digit growth or contractions, and that's because they are saying on an annualized basis. So basically highlighting that if this was the pace of growth that we were going to continue to see in the second quarter, the third quarter, as well as the fourth quarter, then this is the kind of number that you would see. But it certainly doesn't reflect that we've gone back, the economy has gone back to pre-COVID levels. In fact, it's a very, very slow run, and it's not a recovery by any sense of the word, just an indication that there's some activity that's come back into the economy.
Now, tell us a little bit more about these sectors that showed some improvement.
So there's three important sectors that Stats SA uses to gauge where the economic activity is coming from the most. And we talk about the primary sector. So this includes here your agriculture and the mining sector. And that saw really, really impressive increases. So mining up 288% or thereabouts. And that's because we saw the mining companies who were back on operations, producing more things like your PGMs, that's your platinum, gold, platinum group metals, gold, iron ore was in high production as well. And because of the prices that we were seeing in the commodity space, a lot of trading of commodities was happening, and that contributed. And then we look at the secondary sector, that contributed about 155% to GDP growth. And here we're talking about manufacturing, electricity, construction. Masakho, you will remember that we are enjoying much less load shedding apart from the load reductions that Eskom has introduced. But the fact that we're not seeing load shedding shows that producers in big spaces like manufacturing are able to work and produce and export or import whatever the business line is. And so that's why you will have seen an impressive increase of about 210% increase in manufacturing, because we had access to power and access to basic resources to kind of keep businesses going after the hard lockdown restrictions were lifted.
Now, we ask this question all the time, but what are some of the low-hanging fruit that government and other institutions in the private sector could do to drive our economy?
Right, so they do have that reconstruction and recovery plan that was announced just before the investment summit, which is quite important because what it essentially says is that we are going to plow a lot of cash into key sectors that are going to grow the economy 100%. Even though it's contractual work, there is growth that contributes here. And what I'm talking about here, Masakho, is the infrastructure industry in the country. Government is very committed to establishing projects within this space, which obviously will create jobs and in turn grow the economy. And then obviously, as I've mentioned here, keeping industries like mining and manufacturing to such an extent that they are able to continue to contribute to the economy. The mining industry needs policy certainty, which is something that they haven't always been getting. And then also, coupled with manufacturing, they need a sustainable source of resources coming through. And what I'm talking about here is water and electricity, which we know in South Africa has been quite a problem. So those are those low-hanging fruits that government can focus on. There are many other things, but I think we shouldn't bite off more than we can chew, small bites at a time, and start to see the wheels of the economy moving once again.
All right, we'll leave it there. Thank you very much. That's business anchor Rofhiwa Madzena speaking to us, of course, about that breaking story about our GDP improving in the third quarter.